their money grow on their revenue. We are much more investing in basically government bonds. As you can see, 80% of the money actually is being invested in government bond. And basically the performance here to date, as you can see, is slightly almost 9% tax-free. And we anticipating to have an annual performance of 12%. Beside that fund, we have a balance fund also that we are currently marketing. And the good thing about the balance fund is the fact that because of the fact that we are investing in basically fixed income securities, we are also investing in equities. The fixed income securities part actually allow us basically to actually preserve the capital, and the equity portfolio allow us to basically increase the revenue on the money. And as you can see, the annualized performance per se will be around 33.25%. Now, all in all, actually, I also want to really thank our host. We have been very, very, I would say, happy to be here. This is our first time actually in Lusaka. I want to really mark my thank to Mr. Kablon, the MD of Kenya Ray Ivory Coast, who has been a very fantastic host. I want to also extend my thank to GMD, who have been very, very, I would say, welcoming, and also the group chairman. We are here because we want to say to Kenya Ray that we want to be a long-term partnership. As Ejikeme said, that we want to be basically next year, be with you in Ivory Coast when we're going to have the next CEO Summit, and being your strategic partner among all of the partners that you have, and you can count on us to be able to resolve all the financial issues that you might have. Again, thank you again for having us, and have a very good day. Thanks.
Off. Thank you so much. Riding off Labas, we just have 2 more slides to show who we are. Of course, very Pan-African, and the full capabilities we are bringing. Investment management, connecting you to a pool of global investors, human capacity building, tax savings, giving you investment strategies that is Pan-African. So in countries where you operate, especially where you have volatilities, we give you insights as to how to ensure that those companies you think are underperforming will become the game changers. So that's all of that from us. The last slide just shows the key partners we have worked with across the continent, spanning the 52 countries across Africa, West Africa, Central Africa, Northern Africa, East Africa, and of course Southern Africa. So you're looking at a financial services powerhouse that is not exploitative or transactional, but collaborates to ensure that our clients meet their strategic objectives for the long-term and future economic development of Africa. Thanks again for your time, and it's always a pleasure to be in summits like this. And final thanks again to the board and management of Kenya Re. God bless you.
A round of applause for the 2 gentlemen from United Capital. We're going into panel 5, Climate Resilience and Sustainable Finance. And the keynote address is entitled Green Finance, How Insurance, Banking, and Telecom Can Accelerate Climate Adaptation. And this one will be given by the country managing partner for EY Zambia. Mark Wimanenwalibakeni is the country managing partner at EY Zambia, a chartered accountant and fellow of ACCA UK. He brings over 30 years of experience in audit, financial investigations, corporate governance, and business transformation. Prior to this role, he served as an assurance partner at EY since 2017. Mark holds advanced degrees in development finance, accountancy, and law, and has previously served on the Zika Council, contributing to Zambia's accounting standards. Known for his board-level leadership and strategic advisory work, he is a respected voice in national policy dialogue, linking macroeconomic trends to financial strategy and operational execution. I was privileged to share the stage with him decades ago in our high school days, in our debating club days. And today I'm privileged yet again to invite him to the stage. Let's put our hands together to Mark Libakeni. Country Managing Partner at EY Zambia.
Good afternoon. Okay, thank you. When I came this morning, there were a little bit more people than we have now, and I guess it's a graveyard shift. Probably stand in the way between you and calling the day. So thank you very much, Kenyari, for giving me the opportunity to talk about climate finance and contribute to your conference. So my agenda or my discussion will cover 5 areas. Briefly, climate challenge. I'll talk about insurance innovation, banking solutions, telecom enablement, and ESG and how you collaborate. So in effect, what I'll be doing is synthesizing those 3 parts of banking, insurance, and telecoms, and how they then translate into economic transformation. I want to start maybe with this quotation. We are seeing a lot of environmental unrest. Right. Rising levels of environmental pollution, droughts, and so many natural disasters. Right? So growing risks and a very volatile world. And this quotation is from a senior member of Allianz, and I'm sure most of you know Allianz. And I want to read it out loud, because I think it sets the context in terms of what climate risks are and end result if we don't do anything about them. And he says, insurance company Allianz SE has publicly warned that due to rising temperatures, insurers may no longer be able to offer cover for many climate risks. They will not be able to offer cover for many climate risks. Without insurance, many other vital financial services, including mortgages and investments, will become unviable. Right? I think this is a very stark message coming from Allianz, and this is a big, big entity saying that if we don't do anything about climate risks, we end up saying the insurance business is at risk. Why climate adaptation needs cross-sector acceleration? So that's a slide that talks about climate challenge in Africa. And if you look at it, 3 basic things there that send, I think for me, a very stark message. Firstly, is that less than 4% of global greenhouse gas emissions, right? Global greenhouse gas emissions are in Africa. Most exposed to droughts, floods, climate-driven economic shocks. I mean, we are living the effects of drought here with low power. And lastly, it needs about $250 to $280 billion per year to meet NDCs, right? So the NDC is the national determined contributions. We are in the week of COP30. Does anybody know what Zambia's NDC amount is? Anybody? So NDC is expected to reach $17.2 billion. $17.2 billion to execute on the country's NDC. So that's a staggering amount. And that's an amount that needs to be raised by the government from public and public institutions. If we look at the economic and social impacts of climate challenge, 52 million people are affected. yeah, droughts, floods, right? We are a living example of those 52 million that are affected. Right? 700,000 people are displaced. Yeah. 15 billion in economic losses, right? And 40 billion in historical damages paid since 1970. Right? Maize, staple food here, the harvest has declined by over 43%. So you can see Africa is facing unprecedented climate risks. Right? If you look at the map of Africa there, all those are hot points of climate-affected issues. Right? There is no area in Africa that has been spared. And this, ladies and gentlemen, is the climate challenge that the continent faces. I put up this climate, this slide also, because I think it was very instructive in terms of, this is from a survey that EY did on companies and how much they are assessing climate risk. And if you look, this is literally all the businesses or business areas. The darker shade means the business thinks climate risks are high, and then the lighter shade means climate risks are low. What stands out if you look at energy, look at materials, look at mining, and even transportation, the incidence of high or medium to high is quite high. You can see a darker shading, right? So this is businesses responding to climate risk, right? So you can see that climate risk, even for businesses, is becoming a very, very central thing, right? It's affecting businesses. I looked at insurance and I expected to see a little bit more darkness around the risk, but I don't know, but you're insurance people, so you probably know how to evade risks quite effectively. Yeah. That was supposed to be a joke. Right? So climate risk assessment, I think, is extremely important for businesses, and it's something that we are seeing businesses must do as part of their day-to-day or BAU, because everything affects your business. Climate risks affect your business, whether directly or indirectly. The United Nations Environment Program produced a report, Adaptation Gap. So remember, we're talking about climate adaptation here. And climate adaptation requires financing. And the 2025 report, and interestingly, if you've read the report, it's titled Running on Empty. Right? Running on Empty. It finds that there's a severe financing gap. Right? It's in the block there. I show that in 2023, they estimated that the financing gap should be around 26 million. These are the inflows that need to be coming through. The report suggests that today, the funding gap, if you compare 2023 to today, it has shifted by 14 times. 14 times. And for me, that's really, really staggering. Right? So if you take 26 billion, multiply that by 14 to get what the flow should be now. Right? So when you look at climate adaptation and the risks, and I was wondering, so why did the organizers of these events bring in insurance, bring in banking, and bring in telecoms or telecommunications? Typically, when you have these events, there's always these days, especially in Zambia, you have either energy or mining that is being spoken to, right? But I realized that actually it makes sense to bring these three together. Why? Three words that came to mind. First of all, it's the reach, the resources, and the innovation. So these three industries or three sectors brought together deliver reach, they deliver resources, and deliver innovation. So I thought it was a smart move to them together. So how does insurance bridge the protection gap? So how does insurance affect sustainability? How does insurance play into the sustainability area, into climate adaptation? 3 ways, as I see it. First, it's how you design or how you make your underwriting decisions, right? You're a business that supports risk. You de-risk transactions, de-risk various business transactions, right? What underwriting decisions are you making that support client adaptation, that support dealing with these climate risks, right? Products need to focus on sustainability, products that aim to reduce this protection gap, and also products that aim to increase the loss prevention, and also support the green transition. Right. Secondly, it's your investment choices. We do know insurance is a good source of investment funds. What type of investment decisions are you making that support climate adaptation, that support sustainability? That's another important consideration. Thirdly, as you engage with your clients, how are you putting forward the ESG agenda through your supply chain? How are you influencing everybody through your supply chain to make a positive contribution to client adaptation, to sustainability, and drive sustainable finance? Some innovations from the insurance business that I show there. This is to show that actually innovation can work in insurance. Parametric insurance. I think we're seeing a lot of this coming up that's indexed to certain events that you can get your loss. Your loss triggers have become different now from the loss has to happen to, you've got loss triggers and you get a payout. So it's this type of innovation that we want to see more of. This type of innovation that then brings insurance to the frontier of dealing with climate adaptation, supporting climate adaptation, and reducing the risks. A few opportunities that I see for insurance. Firstly, offering incentives for responsible customer behavior. I think we see this mainly in the health sector. If you go to the gym, you eat healthy, you tend to see your premium get reduced. So we want to, how do you move that also into the other areas? Right. How do you support the energy industry? Right. How do we promote renewable energy investment? How do you partner with insurtechs and other firms to leverage AI? I think the previous panel on digital talked about this. How is the insurance industry actually going in front to enhance prevention, loss prevention, improve claims management, and also just manage your own loss models. Right? Are your loss models up to date? Because the risk profile has changed. And lastly, how do you enhance parametric insurance? Right. So it needs a lot of innovation here in terms of how you map the risk and the reward, obviously. Banking. So banks are cash mobilizers, right? So they're like Robin Hood, get from the poor and give to the rich, right? Yes, bankers? No. So banks intermediate. So they pull resources from those who have excess resources, transmit them to those who need the resources. Right? So they are very, very important cog in the financial services, right? Because they are able to pull resources that me and you cannot pull, and they're able to direct those resources to where the money is needed. Right. So what is the role of banks? We've seen involvement of banks generating green finance, right? We've seen them issuing bonds, right? And we think banks should play a bigger role, right, in raising large pools of cash to finance green-related projects, right? Hopefully, with the large pools, will translate into lower cost, because you do need to transmit that lower cost to the project owners. So that is a big role that I see banks playing in this nexus. Banks need to structure innovative financial products and also collaborate more. So I talked about the reach, the resources, the innovation. How are you collaborating with insurance on one hand and with tech on the other? What are the opportunities that we see? Also try and be innovative. How many of us have heard of the Rhino bond? Rhino bond. It's a bond that was issued by the World Bank in South Africa. $150 million. Anybody? So this is a bond that has been structured to support the rhino population, right? Quite innovative. It's a biodiversity bond. So it pulls in money. That money goes to support building the rhino population in South Africa. And it's indexed, right? The returns are indexed to the rhino population. Meaning, if the rhino population goes up, the returns do what? The returns on that bond also go up. And I thought that was very innovative. And an example of how with innovation, you can move our bonds, we can move financing from the top down to our communities. In this instance, it's very specific to biodiversity, it's very specific to the rhino population. And we know rhino, with a large rhino population, it means you get economic activity, you get tourists come and to see those animals, isn't it? Right? And at the same time, it's a sustainable initiative. So banks also need to be innovative around this space. We expect you to be innovative like this rhino bond example. And there I just show a few examples of some of the activity around the banks. I want to pay particular attention to Zanaco. I think they just announced that they intend to list a $100 million bond, green bond, right? And in the words of the CEO, if I may be allowed to quote, the bond is a promise to channel resources into projects safeguarding the environment and uplifting communities, scaling Zambia's financial institutions for green innovation. So that's the purpose statement by Zanaco, right? A promise to channel resources into projects safeguarding the environment and uplifting communities, right? So this is one bank that has gone there and said, this is what we're going to do. So a very good example from the bank. Telkom. I won't spend too much here. I think the previous team did a lot of justice there. So it's about how do we then facilitate. Telecoms have got the reach and the breadth. How do we then move your insurance products, your banking products through telecoms? And how do you create impact downstream from a sustainability point of view? How do you deliver sustainable livelihoods, right, to somebody in Shangombo? How do you deliver insurance to make sure that his crop is covered? Right. Telecoms facilitate this. Mobile money, I think, has been a game changer, right? The mobile phone itself has been a game changer. We talk about the leap, Africa leap, right? So how are insurance businesses, how are banking businesses leveraging this capacity by the telcos and creating products, creating services that ultimately support the green agenda and support client adaptation? This is a sign from GSM. So the GSMA is the Association of GSM Mobile Phones. And they talk about mobile net zero. So this is what they're doing to deliver climate change, to climate adaptation, right? Mobile network infrastructure must become more climate resilient. Climate resilience, I think we see this morning we were talking about poor mobile network driven by lack of energy, right? And that's a climate effect. So how do you insurance businesses, banking business, how do you shift? How do you help the telcos shift into assets that are more environmentally friendly? How do you provide that finance? Collaboration. So I've just highlighted across the three sectors what is happening and what is possible, right? And I want to talk about the collaboration, because you do need to collaborate, right? How does insurance, banking, and telcos collaborate to ensure that our client adaptation across the continent, across our businesses, right, delivers positive results for the communities that we serve? Yeah. I said banks can mobilize long-term capital. Insurance can help smoothen our shocks. And telcos extend the solutions to millions of underserved households. Financial inclusion, right? People we thought were not a market have now become a market. Why? Because of the telephone or the mobile phone, as it's more commonly called. Right? So how is this collaboration taking shape? Cross-sector collaboration. We've looked at the bond. These are some green bonds or sustainability finance bonds that have been raised across the continent. Again, showing collaboration across insurance, across banking, and across telcos. African Development Bank issued a green bond, 500 million. Right? And I think these are examples that show that financing, raising financing, is actually possible. It is possible. So as business leaders here, the challenge is how do we convert these opportunities, these risks, into opportunities? Again, those are just examples of things that are happening, currently happening in the market. I want to close with a call to action. As senior leaders here, as you go away, I want you to think about 5 things. Firstly, are we truly leading climate transition or merely complying with it? Secondly, do we possess the data? Do we possess the data, capabilities, and governance required to execute with confidence? Thirdly, are we competitively positioned? And are we forming the right partnerships? Competitively positioned, and are we forming the right partnerships to stay ahead in a rapidly evolving market? Fourthly, are we innovating at the pace that the market demands in climate finance and adaptation? And lastly, are we proactively managing climate risks while shaping policy and the ecosystem that defines our operating environment? I think these are 5 critical questions. And if you forget everything that I've said, please don't forget these 5 as business leaders. Thank you very much.
Thank you very much, Mark. And to present Mark's token of appreciation, may I invite Leah Rutledge to please come and do the honors. applause. Let's give him a big hand. Thank you. Thank you very much, Mark. So going to the last panel discussion, and it's entitled Climate Resilience and Sustainable Finance. The moderator is Samuel Rugia, who is the Chief Information Officer at Kenya Re Group. He's a data engineer, AI researcher, technology expert, trainer, and speaker with over 15 years of industry experience. He leads adoption of emerging technologies and AI to improve business processes, efficiency, and customer experience. Samuel has also been an industry consultant working with regional bodies like COMESA, rolling out regional integration technologies, designing and execution of initiatives like AI hackathons and summits. He holds a Master's of Science in Computer Science from the University of Nairobi and a Bachelor of Science in Computer Science and Engineering from Maseno University. He's a certified professional IBM data scientist, Microsoft IT professional, Oracle certified associate, and certified project manager. He loves golfing, bodybuilding, and you see this as soon as he walks up. Bodybuilding and fitness. He is also a philanthropist supporting local football teams and setting up of community computer labs to connect Kenyan rural villages and schools into the global network. Let's put our hands together, ladies and gentlemen, as we welcome Samuel K. Rugia.
Thank you, ladies and gentlemen. I know Mark mentioned that this session is quite sensitive, so we shall make sure that we give you the juicy part of the presentations. We will not get down to the hard things. And my work is very simple. It's just to bring you the experts that will dive deep into the topic of climate resilience and sustainability finance. You may have heard words like green boards, accelerate collaboration, parametric insurance. So the next panel of experts, they'll actually be telling us about those things. And I just want to go straight to my first panelist, Violet Kapekele is an insurance professional with over 28 years of experience in both the public and private sector. She currently serves as an inclusive insurance manager at Holland Insurance Zambia, where she leads nationwide efforts to expand innovative and accessible insurance solutions. A microinsurance master since 2019, Violet completed the acclaimed Accelerator and Leadership Program in Inclusive Insurance at Pioneer Insurance in Philippines. This training strengthened her capacity to design, implement, and scale inclusive insurance solutions for underserved communities. Her work extends deeply into farmer engagement at country level. Violet has led and facilitated multiple nationwide programs that brings insurance education awareness and tailored products directly to farming communities. She has collaborated with farmer cooperatives, agro associations, government agencies, and development partners to ensure small farmers across Zambia gain access to relevant and affordable risk management tools. Although based in Lusaka, Violet travels extensively across Zambia, crossing boundaries and reaching remote communities to fulfill her mission, ensuring insurance reaches the unreached. And you'll see why we put her in the panel, the topic that she'll be discussing. She holds a bachelor's degree in insurance and pension management from University of Lusaka. Ladies and gentlemen, give it up for Violet Kapekele. Welcome. My next panelist is Kennedy Chishimba is a seasoned banking executive and thought leader in credit risk corporate finance, recognized for his ability to transform traditional lending practices into commercially driven growth-oriented strategies. With over 2 decades of banking experience, Kennedy has played a pivotal role in shaping the credit landscape of ABSA, Bank Zambia PLC, and wider African Region Corporation business banking. Beyond his executive role, Kennedy serves as a trustee and chair of the Finance and Investment Committee of the ABSA Bank Zambia Pension Fund, where he oversees strategic investment decisions to safeguard and grow member assets. He is also the lead negotiator of the ABSA Bank Zambia Management Bargaining Unit. Academically, Kennedy holds professional banking qualifications, an MBA from Edith Cowan University, and a Master of Science in Finance from the University of Leicester. His passion for continuous learning and innovation and collaboration minded personality positions him as a future ready, highly respected and trusted leader. Give it up for Kennedy Chisimba. My next panelist is Jacobeth Bano. Is the Chief Executive Officer of APA Insurance, where she leads the organization's transformation into Africa's leading provider of innovative, affordable, and inclusive insurance solutions. With over 15 years of experience in microinsurance, climate finance, and financial inclusion, she has pioneered scalable models that protect smallholder farmers, SMEs, and vulnerable communities across Africa, Asia, and Latin America. Her leadership has shaped national insurance strategies, mobilized millions in premium subsidies, developed a team of microinsurance experts, and driven digital innovation in climate risk protection, working both in the private sector and the developed space, including the UN at APA. She is leading the charge in building a client-centric, tech-enabled, data-driven, and partner-oriented solution, one that turns operational challenges into strategic opportunities. Ladies and gentlemen, give it up for Jacobeth Bano. Last but not least, I invite my director, non-executive director, Hamish Chipongu. He is a distinguished C-level executive with extensive expertise in risk management and compliance. With a robust background in overseeing comprehensive risk functions, Hamish has proven track record of developing and implementing strategic plans that align with organizational goals. His leadership is characterized by a commitment to ethical practices and proactive approach to identifying and mitigating risks across various domains, including credit, operational, and market risks. As a member of the Audit and Risk Committee at Kenya Insurance Zambia Limited, Amish brings invaluable insights and strategic guidance to the board. His experience spans several high-profile roles, including Chief Risk Officer at Access Bank Zambia Limited and Chief Risk and Compliance Officer at Zambia National Commercial Bank PLC, where he successfully established risk management frameworks and led initiatives that significantly improved compliance and operational efficiency. Hamish is recognized for his ability to foster strong relationship with key stakeholders, including regulatory bodies and financial institutions. His analytical capabilities and strategic vision enable him to navigate complex challenges in the financial sector effectively. With a commitment to excellence and a focus on sustainable growth, Hamish Chipungu is dedicated to enhancing the governance and risk management practices at Kenya Re, ensuring that the organization remains resilient and well-positioned for future opportunities. Ladies and gentlemen, kindly give it up for my director, Hamish Chipungu. So, ladies and gentlemen, we go straight to our panel discussion. And from our keynote speaker, there are a few things that we picked that we may need to go deep and expound for our delegates. our panel is going to be based on application. So I'll go straight to you, Violet, with your immense experience in handling protection of smallholder farmers and communities. How can index-based insurance be successfully deployed to protect these smallholder farmers and traders? And what kind of collaboration partnerships can we be able to see becoming effective in helping on how to close that protection gap?
Good afternoon. Thank you so much. Well, successful deployment of index-based insurance for smallholder farmers starts with data that farmers are able to trust. There's need to use localized weather, satellite data, and historical data. It's very key to involve farmers early to validate the index. Trust is also built when farmers are able to understand the trigger. And it's also important to design products around farmer-related risks. We need to keep the product simple for the farmers for clarity so that they understand when the payout is and how much. We also need to embed insurance in existing ecosystems such as cooperatives, off-takers, outgrower schemes, input suppliers, and as well as the government programs. There are a number of government programs that are being offered, like the FISIP, like the Sustainable Agricultural Financing Facility, that's SAF, as well as the FSP, which is being conducted by the Community Development. We also need to use technology for scale and efficiency by using mobile enrollments, payment platforms, and automated SMSs. So automated SMSs can also be used to send weather alerts to the farmers. We also need to train extension officers. These are officers that are found in the government because there are over 2,000 extension officers countrywide, so we need to make use of them. We also need to use agro-dealers as they are the face of the product. We also need to address affordability through smart subsidies, use public-private partnerships such as the government, premium support subsidy. We also need to use backed financing that will overcome the barriers that the farmers might face. Remember, one of the barriers to uptake of insurance, the farmers would say that it's actually the high cost of premiums. Yeah, so we need to reach a point where the farmers are able to understand and appreciate the product so that even as they are mature, they're able to demand for insurance. We need to also make consumer education and awareness as a priority. This is continuous engagement. I think it would be very unfair for our farmers to just maybe visit them once a year or twice a year. I think I'll give an example which is a bit off. If a man wants to propose a woman and they only show up once or twice a year, I mean, it's a no, it's a big no.
Absolutely.
Because obviously they're not committed. So we need to be in the face of the farmers because farmers, they also want our intimacy as well as our trust. We need to also educate the farmers on the risk and not just base our sensitization on the sales. We ensure fast, transparent payouts, which is a reputation of index insurance as it is built on speed, reasonable claims. I think previously I've had engagements where farmers were saying they were only given maybe a bag of 5 kg as a payout. So we need to be so reasonable about how much money we are paying out to these farmers, which has to have value. We also need to aim to pay out within a few days. I think that's the beauty of index insurance. As compared to paying maybe after months, they will not really feel the importance of insurance. And remember, marketing is our strongest key. So once we pay premium claims on time, the product will definitely market itself. In conclusion, an example of a partnership that has worked to close the protection gap here in Zambia is Pula. It's an agricultural insurtech which has partnered with 7 insurance companies in Zambia called the Consortium, and works with the government through the primary underwriters to deliver index-based crop insurance under the FISI program. This model has worked. This model shows that when insurers, government, and agribusiness and reinsurers collaborate, index insurance becomes affordable, scalable, and affordable. And trust is also aimed. So then that makes it effective to close the protection gap. Thank you so much.
Thank you very much, Violet. You have actually given a blueprint on how this can be done. And I think one of the things you have actually brought out very well is involvement of the insured, that is the farmer, into the process of creation of that index. You also mentioned about data. And I want us to move on to Jacobeth, because we have seen there's a lot of infrastructure that is happening around the telecommunication infrastructure, and then the opportunities we have in data analytics that Violet has mentioned when it comes to development of these indices. Can you tell us how we can be able to leverage on the current infrastructure and the ability to analyze data, or the data that is available, to be able to activate smart farming? Because Africa as a continent is very big on agriculture, and we need to move towards smart agriculture for the purpose of the climate action.
Thank you so much. I appreciate this forum. Thank you, Kenyari, for giving us this opportunity. And I'm happy, something I didn't mention in my introduction, I'm a farmer and I'm a fruit of a farming.
That's good.
And this is an area that really touches my heart. So a good question, data and telco. And I want to begin by saying that data and telco is no longer enablers, but actually they are critical catalytic. They play more a catalytic role. We talk of, we want access, we want availability, we want affordability of some of these solutions, and also we need growth. That cannot happen without these two catalyzing that. And we talk so much about data being helping in terms of decision making. And this is coming to my topic around climate smart. Actually, if you think about climate smart, it's about transformative farming, where it uses the current technology and also bring in the aspect of data to inform the decision. I want to speak like a farmer. If I'm a farmer in the far south and I don't know what to plant, I may just plant off, which I won't gain from that kind of activity. But if we have data, data can guide and lead in terms of the decision. What should be the ultimate crop to be adapted in a specific area, for example? She talked about parametric insurance. Without data, again, data about who we are targeting and the risks affecting the people we are targeting, then how can we ensure that we have solutions that are really speaking to the needs of these target communities? So when I talk of solutions, it could be the seeds, the seed company you are selling, or agribusinesses company, you are selling seed, you are selling agrochemicals, you are selling whatever you're distributing, but without the knowledge in terms of where are your customers. what are the risks, the challenges affecting them, and how do we solve them. So this one, data comes in very strong to guide in terms of those decisions. What do we give them, and at what point of time do we give them? Bringing in the element of telco, and this is something that also I think the insurance industry, we need to embrace strongly, that our business should not be just to help in terms of adapt to the effects of the climate change, but also we should come in strongly in terms of mitigating, where our approach should be more to bundle. And this one is the data that guides us. Rather than just waiting to come in and compensate so that they can adapt, can we also bring in an aspect of mitigation? And the aspect of mitigation, like early warnings. We access a lot of data, like this weather data. Can we support, help to give our customers, like the farmers, information, some early warnings, how the season is going to look like, how much rain do we expect through the season? Is it ideal for them to do a value chain that requires, if you're thinking of these annual crops, should they do maize that requires longer amount of rain, or should they just switch to short-term varieties because the rain amount is going to be short? And how can we engage and reach them? Because these are smallholder people, when we talk of farmers, they are spread all over. Then we leverage on telco, leverage on how to reach out to them, inform them, give them these early warning messages, help them on how to mitigate, help them so that when as the time we come in to respond, we've at least support to mitigate. And I see that kind of proactive move becoming even more stronger. Someone from Allianz, we were told in the keynote speech, is warning that we are entering into an era that we may not be able to offer climate insurance. And I can attest this is true. I've offered solutions for farmers, insurance protection, for over 15 years. And I know some markets that it's either a cyclone this year, if not cyclone this year, next year it's a drought. Then what happens? Because it's about risk, these solutions become more expensive and accessible, and it reaches a point it doesn't make sense to offer. So what can we do about this? If we bring in the element of mitigation aspect, then we are able to support and grow that, in the sense that we don't run into the challenge of not being able to offer now the insurance protection to adapt to the challenges. So something also I think we need to embrace, especially for the telco, education awareness is really critical, not only on insurance, but also I'm looking at the smart farming. When they are making the decision, they don't have this ability. Some they don't have the smartphones. But the government, for example, they could work with this infrastructure that they can get this information that will guide and educate the farmers that if you are in this agroecological zone, for example, the government first should make agroecological zones that are driven by data. The current agroecological zones that we have, it's more defined by the administrative boundaries. If we are talking about the districts here, or the DACO, is it camps? It is more from the administrative perspective. And that is how our agriculture extension is driven. Is it really right? No. If we are talking look at a country like Kenya, we are talking from the county perspective. Is it anything related to the agroecologically related? Is it related to the weather? No. So what do we need to do? This data, we have it. Can we utilize to give us clustering of our farmers into these agroecological zones that we have, based on the data, based on the soil, rain data, based on the soil, and all those like. Then we can guide them in terms of what value chains to do and at what time should they do that. So you realize that data comes in very strong to guide also in that. Something also, I don't want to mention insurance, we've mentioned that. Yeah. Designing those solutions, it comes in there. Yes. And yield prediction. Yield prediction is a tool that we can have, and it can help especially on the off-taking side of the things. With the yield prediction, we can drive production in terms of, and off-taking can map in relation to knowing where are we going to get these yields. And with that, the off-takers are looking at the farming from an end-to-end, where we have the financial service providers, insurance, the loan, we have the agribusinesses to provide food, seeds, fertilizer, the inputs. Then also we have this information, and we also have the off-takers. Then you realize the farmer is really producing, knowing that I'm targeting this area. And the off-taker also is preparing their books and their off-taking strategies, knowing that this is how the season is looking like, and this is where we can off-take from. So these two, you realize that the telco is the enabler for the digital ecosystem, which we cannot run away from at the moment. And the untapped markets for the insurers, for the banking sector, I would say strongly, it is those underserved areas where the farmers are. And for you to access them, for you also to offer your solutions affordably, then you have to work with the telco. The bundling come in. The bundling come in so that you can leverage on their distribution channels, and by leveraging that, you reduce the distribution costs. By reducing the distribution costs, you make the solutions affordable. And by doing that, we ultimately get what we call the growth, and not just a growth, but sustainable growth, which all of us we are looking at.
Thank you very much, Jacobeth. I think what has popped up right on top is early warning systems, use of data. I think that's an area of improvement. You've really mentioned quite a few very critical points that can actually be, how data can actually be used to turn around this sector. I want us to move on to green boards. They came up during the keynote speaker session. Kennedy, how can we use green boards to support community climate resilient projects that are geared towards developing our communities?
Okay, thank you so much, Sam, and good afternoon, ladies and gentlemen. I think the keynote speaker did a good job in articulating exactly our role as banks, but also the role that green bonds play in making sure that we support the climate resilience projects. For the small scale operators, I think the go-to, in my view, would be the commercial banks, because commercial banks do offer various climate resilient products to help them navigate some of the challenges that they face. In the agri space, typically we've provided loans to the farmers to help them build irrigation facilities, dams, and all those things. The idea is to help them make sure that they have the capacity to store water, which they can use during times when they don't have sufficient rains. In the last season, we did see the benefit of that, because a number of farmers, they had to utilize the water resources that they had kept in the dams to support their winter crops, because there was not much, rainfall. They had to leverage off the water from the dams. And because of that, we saw from the banking sector that the NPLs, or non-performing loans, as well as the loan loss ratios, were very low. Why? Because farmers were able to utilize some of those options. And when we got to the winter cropping season, all that they needed to do was to make adjustments in terms of the scale of their operation. So banks do play a very important role in making sure that we empower the farmers to be resilient. Farmers play a very important role in making sure that we have food. And partnering with insurance companies, obviously that helps commercial banks to absorb or take on some of the risks that typically would not want to, because they help us to improve on the credit quality of those clients that we deal with. So my appeal to colleagues in the insurance sector is perhaps let's continue partnering together because obviously you've had to take some big blows, but I guess we can put our heads together to see how best we can share the risks, through risk participation of the sort, so that we continue supporting some of these vulnerable sectors. Coming to the question of the green bonds, so green bonds, the sole purpose of green bonds is to support large projects that are intended to build climate resilience in communities, in countries, and everywhere else. Now, the genesis of that is, I think, as the world realized that the environment was really becoming more and more damaged, there was need for people with a lot of resources to support initiatives that are intended to bring resilience, to try and mend some of the damages to the environment. So with that, we've seen the evolution and development of the green bond sector. In Zambia, I think the keynote speaker talked about one of the banks that issued a bond, or they're in the process of doing so. I think it's about $100 million, Zanaco. I'm also aware that CEC issued the first bond for $200 million. That was last year, again, to invest in the renewable sector. So we're beginning to see a lot of appetite from the investors to support these very critical climate intervention projects. And that we expect to continue as we evolve. The International Capital Market Association, I think, is helping a lot to create a framework for the players to feel more comfortable to participate actively, particularly the fund managers and other investors. So some of those frameworks that they've put in place, I think, will support the growth of the green bond as an intervention for climate resilience. The central bank, the Bank of Zambia, is also playing its part. The last year or the year before, they did issue some green financing guidelines to the commercial banks. Again, it's with the realization that unless we step up across the ecosystem, we wake up one day and we don't have a place to call home. So there's a lot of work going on, still early days, but I think the commitment is there across all the chain to make sure that we support projects that deliver strong benefits within the space of climate resilience. Thank you.
Thank you very much, Kennedy. Definitely, if you had more time, you could be able to expound for us about that green bond, but you brought it out very well, and you can clearly see the role that the banks play, in this collaboration. Now we need to wrap up this panel, and to bring it home, I'd like to invite my director, Mish. We've talked about ESG principles. We've talked about integrated risk. We've talked about collaborations, cross-industry collaborations. Can you kindly tell us how all this can be used to advance sustainability goals? And also, further, give us some examples of impact assessment of maybe organizations that have been able to pick this and implement it, how their performance have actually been impacted, and also the stakeholders' trust. How has it been when you know that your organization is actually compliant with all this?
Good afternoon, everyone.
Good afternoon.
Yeah. So really, we'll start with trying to look at the future as we look at ESG and sustainability, and then the collaboration. We have about 4 or 5 years to get to 2030. So by 2030, there will be no African reinsurer without integrated ESG risk that will be able to access international reinsurance markets. And that's a fact, because this is being driven by Lloyd's and Swiss Re and other
global leaders who are demanding that ESG must be implemented. So really, ESG integration is no longer a public relations choice. It's a question of survival. Is our business going to continue beyond 2030 without integrating ESG? If we don't, we stand the risk of being like blockbusters. I'm sure every one of us are aware of what happened to blockbusters. They did not move with the times. So the question is no longer if we adapt, but how fast we embed ESG into risk and governance. So the early movers of ESG integration will define Africa's standard for resilience and competitiveness. So really, African companies who have strong ESG integration will be able to access capital 30% more efficiently than their peers. So it's important that if we want to access this capital, that we implement ESG. So ESG also has got certain positives because it builds investor confidence, it reduces financing costs. Everyone who's borrowing is always talking about financing costs. So ESG implementation will help reduce the financing costs and also strengthens the stakeholder trust. So really, integration links sustainability to profitability. So we want to explore why ESG matters now and how to mitigate it simply and what leaders can do going into the future. So our aim should be turn ESG from compliance cost to competitive advantage. And we all, our businesses, we all need that competitive advantage. And that is where even the integration even works much, much better. So why ESG now? Kenya's 2023 floods caused $1.2 billion in insured losses. So really climate risk is now underwriting risk. Africa's green finance gap exceeds $250 billion per year. And this was also brought out in the keynote speaker. So global investors are embedding ESG risk directly into credit spreads and the premiums. I recall when I was chief risk officer in one of the banks, well, there are only two banks, Zanaco and Access Bank. If you wanted to borrow, and it's a big project, we had to subject you to ESG requirements. If you met those requirements, then you can access the funds. If not, we would either insist of certain actions that you needed to take, or wouldn't lend you money at all. So really, investors, even investors now are embedding ESG risks into their investment strategies. So integrating ESG improves resilience, disclosure credibility, and market relevance. So ESG is both a shield against shocks and a bridge to new capital. And everybody wants this new capital. We just got some capital as Kenya Reinsurance Zambia of 50 million, but still that is not enough. So we need capital. We need to ensure that our ESG is on top. Now, what about converging industries? When you converge industries, what comes about is you will also have to converge the risks. So when mobile money, insurance, and agriculture, for example, intersect, ESG risks cascade across all three industries. A single climate event can disrupt claims, logistics, and customer trust simultaneously. So converged industries require joined up ESG governance and data visibility. Integrated oversight enables faster, smarter, and enterprise responses. So really, the value of ESG is beyond compliance. Companies or firms with integrated ESG frameworks enjoy 15 to 20% lower cost of capital in the African markets. Development finance institutions like FMO, DEG, and many others, no fund, now make ESG compliance a prerequisite for funding. I remember when we were trying to raise Tier 2 capital when I was at Zanaco, and we were trying to raise it from FMO and DEG, ESG requirements came in, so we had to meet those requirements. So really, integration enhances reputation, attracts top talent, and drives long-term stability. Compliance avoids penalties. Integration earns premium valuation. So we are not here just for compliance purposes. We want to make sure that our integration will earn premium valuations. So ESG maturity will convert risk management into opportunity creation. Now we've spoken so much about ESG, but what are some of the frameworks that we could use for integration? There's no point of reinventing the frameworks. We have the ISO 31000, a risk management framework, and the COSO ERM. If you implement these two frameworks during your integration, you will have your ESG system in your organization. Also, we have to make sure that governance is up to speed when it comes to ESG. So we need to create a board ESG committee with clear oversight mandate, or indeed in the risk committee charter, we also embed ESG. In our strategies, we need to ensure that ESG matrices are included in our strategy and have KPIs that are linked to ESG. So we also want to use integrated dashboards to track ESG alongside the risk appetite. So we must have an appetite for ESG risks. And we must be able to review regularly on the ESG risk and give the board an update, including the investors. So really, governance is very, very important. And there are three questions that board members and CEOs should be asking. And these are, which ESG risks could disrupt our business model or reputation? How do we measure and report ESG exposure credibly and consistently? Who in management owns ESG integration and performance outcomes? So really, we must pay attention to ESG governance, because ESG governance should be evolving from awareness to structured accountability. We just don't want to be aware about ESG, but we also must be accountable for it. So boards that institutionalize ESG oversight will lead investors' trust in rankings. So what are the quick wins that we can do? One is conduct a focused ESG risk assessment of top exposures. Two is integrate ESG items into your enterprise risk register. Thirdly is to pilot ESG KPIs in one business unit and evaluate outcomes. So if we have early momentum, we will build credibility and internal capability. So progress, not perfection, will drive the transformation. We have to ensure that we are not looking for perfection, but we are looking for progress consistently in the short term and have these quick wins. Now, we have an example, an African example of a reinsurer. They began with board-level awareness and capacity building workshops. They formed a cross-functional ESG working group reporting to the risk committee of the board. They incorporated ESG indicators into risk dashboards and annual planning. They faced, of course, data quality gaps, but they dealt with them. And the results was improved disclosure readiness and stronger stakeholder confidence. And they started this program in 2023. They did the awareness. had a working group and integration up to 2025. Now ESG is fully implemented. So your actions going forward should be, board action should be, add ESG as a standing agenda item, assign oversight to risk committee if you're not going to set up a separate ESG committee. For management is conduct a materiality assessment, identify the top 5 ESG risks, and then pilot an ESG metric in performance reporting. So really, these 3 steps will move ESG from awareness to full integration.
Director, I'm just looking at the application of the concept that you've given up. I know if we really had time, we could actually be able to expound all that. But I'm just being told here that the clock hit 0 a long time ago. But I think the delegates have been able to get that. Maybe you can just close by mentioning an example of a success case, then we can close the panel in just a few seconds.
I think I've been through the reinsurance journey of a reinsurance company that embedded ESG. So since the time has run out now, the challenge is clear: start, measure, and improve. So in the next 18 months, do your awareness, set up the working groups, and do your integration. Thank you.
Perfect. A round of applause for my panelists. Delegates, you've heard. I really don't have to add whatever the experts have said, and I think this brings us to the end of our panel and conference presentation, panel presentations and speakers. For me, it's just to thank you for your patience and for your time, and also for my panelists' information that they have shared with us. Thank you very much. A round of applause.
Thank you, panel. Before you depart, may I invite Director Bwalia to please come and share the tokens with this last panel of our summit. A round of applause for our moderator. A big hand for Mr. Chipungu. That's for Violet Kapekele. A round of applause for her. That's for Mr. Kennedy Chimba from ABSA. And last but not least, Jacob Barno from Alpha Microinsurance Kenya. Thank you. Please just stand together for a final picture. I don't know if you're smiling enough, but it'd be good to see some. There we go. There we go. Thank you. Thank you so very much. Ladies and gentlemen, that was the final panel, the very, very final panel for our 2025 summit, and this one was entitled Climate Resilience and Sustainable Finance. Thank you so very much. We'll go into the closing formalities for this session, but please remember we are going into dinner, and so we really appeal that nobody leaves the hotel, because looking at time, it's about 16 hours almost. We just have about 2 hours before we come in for dinner. So please do not leave the hotel. We would want for everybody that is here now to just transition into the dinner. So the last formalities for this closing session, I would like to invite the Group MD to come forward. And there's something special we want to celebrate that he will lead us in.
Okay, good evening, ladies and gentlemen again. I'd like to request that our group chairman, Mr. Eric Gumbo, comes over so that the MD can be able to hand over these awards to the group chairman. Please, a round of applause for our chairman. Encourage him as he comes over. So Kenya Re has been privileged to get an award, and the first award is the 7th Global Takaful and Retakaful Award 2025, International Honors for Takaful Excellence. A clap for Kenya Re. And here is the award. Thank you. Thank you very much. Now, the second award is the Kenya Re got the CFI Winner Insurance Award, Excellence in Rapid Claims Settlement Delivery in Africa. A round of applause for Kenya Re. Thank you very much.
So a round of applause for Kenya Re for scoring high. Congratulations, big, big congratulations. Mr. Chair, Group Chair, we love you so much. We're going to ask you to come back here, sir. We don't want to let you go so easily. Please come up, sir. Please come up. So this is now an award for the group chair. There you go. You will not walk away empty-handed. Thank you so very much. And that's indeed for your guidance at the helm of Kenya Re. Another round of applause for the group chair. And so, the 2025 CEO Summit is just about done. The last thing that we're going to do together is dine and wine. Now, I don't know which one you prefer more, whining or dining, but we'll do both this evening. So there will be dinner at the hall where we were meeting yesterday. So right now, we will break from here. We'll have, I don't know if we have coffee, but technically we'll be transitioning slowly to the hall or to that area until they open the doors and allow us to go in. Then, like I said, all of us, preferably without exception, to move together and have the final dinner. Eat, drink, dance, have a good time, and of course look forward to tomorrow's excursions, which will be the final activity together. And just to remind you of the excursions, I was getting requests for registration to the excursions. I don't think that is possible, unfortunately, at this point, because we had to confirm with the venues and do all those logistics. So we have Chaminuka. Chaminuka, those going to Chaminuka, please be here 8:30. And then for the Lusaka National Park, be here at 7 a.m. And then Kafue for the Sunset Cruise, your bus leaves at 12 noon. So please make sure you catch those buses as they leave for those particular excursions. Thank you, everybody. We can begin to slowly make our way now to the other side and get ready to have the final dinner, the Last Supper together. Let's proceed.